All right, traders, good afternoon. This is Christian from Biotech Trade Group, and this is your end of week video for Friday, October 2nd. So, just looking at the overall performance for the day. Really kind of a mixed batch today of performance. SPY finished down just under 1% for the day. Here, I'll zoom this in a little bit because I know it's difficult to read, I think, on the video. But SPY finished just down 1%. Really interesting underperformance, lagging performance today by the Qs. There was a bounce today by the Qs, and then it was completely wiped out. Down 2.8% for the day. And then on the other hand, the Dow was at one point positive for the day. Not that I looked too much at the Dow stocks these days, but you do hear it from time to time. Hey, the Dow has turned green on the day, that type of stuff. IWM was the outperformer, and actually the outperformer, I believe, for the week too, but up 2.3% from the open. So congrats if you nailed the small cap rally today. That's not, I would tell you, not what I was expecting for the day, but it is what it is. Up 2.3% from the opening print and up on the day. We'll put this one in green over here. So pretty impressive, I would say there. Bonds, we'll talk a little bit about them. They, are not showing any of that kind of, if you want to use that term, risk off. Usually risk off, equities are down, bonds are up, things like gold are up. Right now we're not seeing that relationship go on in bonds. They are continuing to look actually like they might break down. So fairly interesting, I would say there. Gold continues to be kind of a non-factor, not really doing too much of anything. And the VIX did close, I believe, closed up on the day. Yes, it did close up on the day, but well off the highs of the day. So let's go through a couple charts here, and then we'll talk about performance. There's a headline out that just hit the tape about Trump is taking one of the Regeneron drugs, or the cocktail. So let's kind of dig down to what the indices are showing us now at the end of the week. Well, there's a couple things that jump off the page to me, or observations, looking at this S&P chart. And I'll zoom out a little bit, then I can zoom back in a little bit. But number one, what I use, if you're a regular viewer of these videos, is I use the value areas a lot. Right? That really tells me if we're range bound, or if we're in a range or in a consolidation area, or if we are trending, basically. So as of now, we bounced very nicely off this, and this was not that long ago, by the way, just about a week and a half ago, where we took out this lower version point of control. We got into value for the month of September, new value area, and it's a wide value area. So I don't like to make predictions, but I will try to kind of read this for you from what I see in terms of value areas. And by the way, we're doing a value area market webs webinar on Monday. We're going to talk for members, right? Members only, and we'll be talking about what the value areas are, the kind of the whole picture in sectors as well as the major indices. And I'll have obviously a special guest for that, the architect of the market webs himself. We'll also talk about the weekly watch list program that I'm running. Right, every weekend for members, I put out a watch list. I'm sure it got hit a little bit today in terms of performance. But let's see where it did finish for the week. I don't have it up, so shows you how much I prepare for these videos here at the end of the day. Like, I'll tell you the performance, it is what it is. Yeah, this did very well for the week. So this did wonderful for the week. So here's the performance. Oh, this was helped by Twilio today. Beautiful. So we hit on like 3 stocks this week. So again, I'll go back to the S&P chart here in a second, but every week I put together a weekend watch list, and I actually buy this on the open. What I basically do, and again, I'll talk more about this in the member webinar on Monday after the close. But what I do is I buy this watch list and I substitute out of the watch list on Fridays, and I did this today, and I go into SPY. And then what I'll do on Monday's open is I'll sell the SPY hedge, not SPY hedge, but it's beta, and I'll go into what I consider the alpha, which is or should be the alpha, which is the watch list. So I forgot that we had Twilio in here. I was so wrapped up with everything else going on today, but up 19% for the week. So the reason why I had this one in here was because of their analyst day. So this worked quite well. Datadog, Pins, Lennar, Restoration Hardware. So we Square, ServiceNow, Crowd, Deere, all of these names up decently. Deere really had the performance today, but a couple names, of course, didn't work that well. Surprisingly, the rails haven't really been able to follow up with major performance. Workhorse was down as well this week. That name did not work. But I have to say, up 3.9%. Up 3.9% versus the S&P only up 1.6%. That's what I'm looking to achieve every week. And that's, for the most part, what we have been achieving is outperforming the indices. So that gets me motivated for this weekend to put together the weekend watch list. So again, not every week do we hit a couple trades like this that were up well over 10%, but hey, it is what it is. Put the work in, and hopefully we get the performance that we're looking for. All right, so that has me excited. So. But yes, let's go on. So yes, I will be going over exactly how I use a trading application called M1 Finance to do this portfolio trade, and I'll be going over that Monday after the close. So yes, going back to the S&P chart here. So this, to me, when we normally have these bigger value areas, it means that we could be in value for the whole month. Now, it's possible, right, that could happen. Does that kind of make sense? Considering that all these things that are going on right now, it does. Maybe we get a lot of chop. What I would also say, and I'll add my little thoughts in here too, is that I think we talked about in yesterday's video, selling the rip and being able to buy the dip a little bit. I think that's kind of how I'm looking to play this market for the next month. We'll see if I do that very well. Today, I didn't carry that out very well. Yesterday, I had a great day. Today, let's talk about the sector performance for a minute. And let's just go, before I talk about the sector performance, I want to just review the Qs. The Qs were outside value. They got outside value yesterday. They're back inside value, back at the 50-day moving average. So they're not ready to break out. Small caps had the performance today, but they're right in the middle, smack in the middle of. Now, I wouldn't say this is the point of control where the majority of volume occurred in September, the last period. So they are leaning to the upside, but they're also right at the 50-day moving average. I mentioned I would talk about bonds. Yes, they are leaning to the downside. A couple things here. I put this out on the chart. I put this out on Twitter, and people argue with me, which is normal for Twitter, right? But I said, hey, this is a very slim value area. Contrary, going back to this S&P futures, notice how wide this value area is for the month of October. Notice for bonds, whether you use ZB, which is the longer bond, than TLT, but you could see how slim this value area is, right? Meaning that a decent move could be coming for bonds. Now, I put this out on Twitter and I said, hey, my technicals, when we see a very slim value area, usually that means, not all the time, but often, that a big move is coming and it's leaning to the downside. I think that's a very out of consensus thought that because what happens when when the price of bonds go lower, as they are right now, that means rates are going up. And I think that's a very out of consensus view that rates are going to go higher. So that would be really interesting. That would catch a lot of people off guard if rates went higher. Somebody told me, of course, on Twitter that, oh, well, it's going to test and then it's going to rocket up. Hey, I'm open to that. But right now, I love how people think that everybody knows, right? Everybody knows what's going to happen. They got their crystal ball and their prediction hat on, and they're going to tell me what's going to happen. I'm going to tell you I'm going to follow price. Whatever way it breaks, I'm playing it. I'm not, if we do that snapback, which I've seen before, you kind of in a very thin value area, you could test both sides before you go one particular way. So that's kind of what I'm waiting for. But I do think there's a decent move coming in one way or another. Right now we're leaning to the downside. Let's talk about the sector moves. So this was pretty surprising for today, right? I don't know really what got oil names going. This is a head scratcher to me. We actually saw a Schlumberger call buyer. I believe it was a call buyer today. The banks were hot today. Like other than maybe if interest rates do rise, that should be good. And if the yield curve steepens, that it should be good for banks. For oil companies, I don't know, because oil was down today, so I can't really figure that one out. And sometimes things are just not going to you're not going to be able to figure out every single move in the market. If it doesn't make sense to me, I said this earlier, I don't touch it, right? I don't try to short it. I don't really know what's going on until I can formulate some type of thought. Of course, I follow trend, number one, but of course, like to have some ideas formulated around why moves are taking place and then position accordingly. But yeah, the banks were very strong, and it did seem like today, which was very odd, that it was more of a value type move. I would think, and I said this earlier in the trading room, that with all these COVID cases increasing, not just what happened with the president, but it's going on in Europe as well. I heard some ugly headlines in Canada as well. They're starting to tick up a little bit in New York, a little bit so far, and some other places around the country too. So you would think what we've seen before is the trade to go into is your things like Zoom Video, your Peloton, I don't want to call them stay-at-home stocks because they're not just stay-at-home stocks, but they started to kind of get going in the beginning of the day. We did see some really unusual activity in Zoom yesterday, but look at what Zoom did. It finished down on the day and looking like it kind of failed for the day, even though it didn't lose the short-term trend. But from where it was this morning, it was up to $30 difference. So really, this kind of caught people for surprise. Peloton still finished okay for the day, but decently off the highs. But yeah, I thought today was particularly tricky because I really wasn't positioned thinking I'm going to go long banks on the COVID news. So sometimes the market does that. I had mentioned too, right? And if this happens to you, just let it breathe a little bit, right? I just stopped once I kind of said, hey, this is really unusual. I also, like, semis were down 3% on the day too. That's also a head scratcher to me. This came back. Now, this kind of looks like the NVIDIA chart too, but this was not what I was looking for, to see semis down 3% today, and one of the worst sectors. I think it was the worst sector on the day. So if it doesn't look right to you, I didn't really do any major buying at the end of the day. What I did today, and I'll see if I can bring up my trades here, but I got into some trades in the morning, and then I realized, hey, they're not working as I thought they were. So I made some adjustments at the end of the day, which I talked about in the week. That I talked about in today's Q&A session today, which we do, middays, a few days a week for members. And I said, hey, this is not panning out the way I thought it was. So, it's one of those situations in trading, and I talked about this in yesterday's P&L video, that, hey, if you're wrong, which I was wrong in a couple things that I did this morning. Just don't stay wrong. And I said in the video that I'm going to have to make some end of day adjustments. I was trying to play the dip in SE, and I don't need to wear calls right now. I've got a stock position in this one. I don't need to double up in my risk, so I got out of that one. Reluctantly, I got into some service now earlier in the day. In my trading account, I want to maintain exposure that I'm comfortable with. Now, for me, is not the right time to get over the tips of my skis with positioning. So, every once in a while, we kind of forget, right? We're watching the tape and some things look pretty interesting. We see a lot of call activity, but really, right now, I think managing your risk, managing my risk is paramount in this situation. So I do have exposure on. You could see that I did leave some starters on, like I left LVGO on, and I also added to XHB. Not added. I already had exposure to Lennar, but we saw a little bit of calls in this, and this looks really nice to me. So I'm going to go with what I see in the charts too. This XHB had a really nice looking, the home building ETF had a really nice candle on the day, and it looks like it wants to break out. So, I'm going to continue to kind of look for these opportunities, but make sure that my risk is not getting out of hand, and also limiting what I talked about in the P&L video yesterday. I'm limiting my exposure to options right now. I have a much better handle on risk with stock positions versus option positions, which I view as riskier to swing trade. If you're day trading them, that's fine, in my opinion. But in terms of swing trades, right now I think is a difficult, more, if we chop around rather than trend, that's going to be a difficult place to hold options. So that's that. I wanted to go over. So that's kind of the. So in a word, for today's performance, I would call it tricky, right? And if you're like me and didn't fully understand some of these moves today, like the banks outperforming and the oil companies outperforming, then you're not going to be figure these things out every single day, and that's kind of how I was for today. We'll leave it at that, and we'll get back to it next week, right? The important thing, in my opinion, is not to press when things are not making sense to you. Okay, so the week's performance, just to glance at this really quickly, some really interesting stuff going on here. Look at the damn solar ETF. Of course, I've talked about solar nonstop, but up 15%. Already an outperformer, up 15% this week. Even despite energy rallying today, still was the underperformer for the week. Banks, again, very surprising to me, up 7% for the week. And retail was in there. Retail was the outperformer yesterday. Utilities also performed very well. So maybe a little bit different. That's why I always review this 1 week performance, because there's always a couple surprises in here, right? Also, Biotech did not really participate this week. By the way, the performance is on the top line. This was the first week out of 4 where the indices kind of cracked out of that underperformance. They were down for 4 weeks in a row, not this week. And again, you could see the surprise to me is this guy. Now, last week's performance. IWM was down 4.5% last week, so it just basically rallied back. But yeah, and you could see their bonds were down 1.4%. They were also down last week as well. Gold was up a little bit this week, and again, some surprises in international. You could see European financials were amongst the best performers. South Africa, Nigeria, some of those frontier markets. So there's an ETF for that. That's FM. Kind of an interesting looking consolidation here in frontier markets. Which way is this going to break? I would keep an eye on this. I would love to trade this ETF, but I'm watching for a break. We'll look at EEM as well. Not something that I look at every week. I think the emerging market trade has been tough, so I haven't really participated in that too much. Let's just wait for Thinkorswim. Yeah, it's in value, just under the 50-day moving average. I don't see a lot to do here. All right, guys, we'll leave it there for the week. And again, I look forward to the challenge of outperforming the market again next week. If you're not a member of Tribeca Trade Group, get involved. Go to my Twitter feed, and you can click on the pinned link on my profile. And yeah, so look at that, up 3.8%. 3.8% for this week for the watch list. I look forward to trying to outperform next week as well. Have a great weekend, everybody. See you on Monday.